All right, guys. So what's up? I'm about to show y'all. Well, first, we're gonna start over some just trade type of, some type of examples of some trades and just kind of how my process is. And then we'll get over into trend analysis. Today's class is trend analysis, and I believe if I was thinking correctly, Zambel, correct me. Was it trend? Was today chart patterns or trend analysis? I think it was trend analysis today, or was that yet tomorrow? Can't remember, but she'll let me know in a minute. Okay, so first of all, I want to show y'all like a little trade on SPY and kind of how I think it. Oh, today is Head and Shoulders. Not gonna lie, I don't feel like doing that one because I gotta find some. I'm gonna do trend today. We're gonna switch it. We're gonna switch Head and Shoulders. We do that tomorrow. We do trend today because I have to like look for Head and Shoulders and stuff like that, and I really don't feel like doing that today. No offense, but so first, let's go over a trade I did, and I'm going to be using a replay feature real quick, just so y'all can kind of understand and like the thought process and everything that comes with taking the trade. So my trading style is pretty simple. First, what we want to do is we want to first identify support and resistance, right? Demand and supply and demand zones. So first, I want to do is, I like to, especially if I'm day trading, I'm gonna just give y'all like a little hidden gem. Your hourly charts, your hourly levels are, especially for day trading, are going to be your best levels. I understand you got the daily time frame and everything. Oh, today is trend analysis and psychology check. All right, cool. Let's rock with that then. Yep, I knew it was something. Yeah, so today we're going over trend analysis and psychology. So starting off, one of the quick things that I like to tell my mentees is if you're day trading, that's normally what the market is giving us right now. You want to like focus more on your hourly levels. Those are going to be your levels that you actually see throughout that day, right? If you focus on the daily levels, those are a little wide. You can definitely have them, but overall, your hourly chart is where most of your, most accurate levels are going to come from, right? So what you want to do is the 4 hour is cool. I look at the 4 hour in the daily chart and the weekly as my swing trading levels. As far as like day trade, I ain't gonna lie, I even swing trade with my hourly levels, to be honest. The hourly just gives me like the best accurate levels in my opinion. That's the ones that I use the most. But I do the daily as well. But most of the time you're gonna notice it's the same levels. So first, right, I want to start with the recent days price action. I don't want to have to go through all the way up here because as you can see, we're day trading. We don't think that SPY is going to 450, between in that day. So there's no point of even wasting your time, right? We want to stick with what is right, what is relevant right now, right? So first I want to look at, the previous days. As you can see, well, first let's replay this real quick. Let's take this whole day off. So this is the candle that was that day, right? So this is what your charts look like before the day even started. So first I want to plot my support and resistance levels. So as you can see, we have a support level here, right? We want to go ahead and plot that. Next, we want to plot that high as well. Don't overcomplicate support and resistance, guys. I'm pretty sure you guys already know. Just don't overcomplicate it. Plot your levels, the ones that are clear, and just call it a day, right? Too many people, overcomplicate this part. The way I do my levels, I don't do pivot points or anything. I try to like find, swing highs and swing lows. That's kind of where I like to plot my levels at. So I'm just looking at those highs and those lows. So you can see we got a high here. And I just keep it simple. I know a lot of people, especially new traders, they definitely take this part and just make it a whole lot harder. All right, so let's see if I can find one a little more levels. That's another one. Oh, my bad. Hold on, y'all. Trading view. So let's make another one right there. As you can see, that was support, 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 resistance, resistance. Okay. So let's see. Got this wick here. That's that 410 level. So then you can start going down to those smaller time frames and get some more accurate levels. I come down to the 15-minute to kind of get some better levels. And if I gotta adjust some, I'll go ahead and adjust them. Here we go, making sure that you're just plotting everything that you can. As you can see, what is this? There we go. And just make sure, like if it ain't clear, guys, don't put it. So right there, that was like 413. Okay. All right. So normally this is how pretty much my charts look. It's always so simple when I look at your charts. I don't know why. I don't know why either. Okay. So now that we have our levels, pretty much this is pre-market, before the market opens, we kind of have our levels and, how we're going to trade it. I forgot to plot this high. Make sure that you are plotting all highs, right? Previous day's highs, you want to go ahead and plot that high because that level is going to be significant as the market opens. Yeah, I'll be doing too much just a minute. And I'm gonna ask you questions in a minute, right? So as you got your levels, pretty much you want to wait for the market open. This is a crucial point. So make sure that you write this down in your next step. This is a crucial point. So these are pre-market levels and not previous days. These are previous days, support and resistance. I don't plot pre-market like that at all. Just a quick tip. I don't plot pre-market. Hold on, there's one more level right here. My bad, y'all. This is previous day, so you want to plot those swing highs and swing lows. Okay, so now we officially have our levels, right? You see, I'm looking for swing highs and swing lows, pretty much just significant levels. Don't overcomplicate this step. So next, what you want to do is, now remember, you waiting for the market to open. I don't trade. Yes, I use I don't know about the MA. I use the EMA, so I ain't even gonna lie to you. I don't know too much about the MA to really give you I can't really speak on that because I don't really know. So what you want to do is, this is a key step that I haven't taught yet, but what you want to do is, one of the things that you want to do, you want to plot that's why I say, you guys, wait for the market to open. You want to plot the stock's opening price, right? A quick way to do this is the way I do it, just really quickly. I just go on Robinhood, and literally Robinhood has it right there, right? Anybody have any static? Can y'all hear me clearly? Yeah, that must be you, Liz. I don't know. Okay, so this is a key step. I want you guys to write this down in your notes. I'm plotting the opening price, right? That's one thing. Obviously, the market has not opened yet. So it must be an Android user. Obviously, the market hasn't opened yet. So I don't know the opening price yet. So I want to wait for the market to open. So let's go ahead and let the market open for a minute. Okay, so as the market opened, I know the opening price for this day, so I'm gonna just go ahead and plot it. You can go on Robinhood and look. It was it was 409.49, I believe. I think that's exactly what it was. So you want to plot that. So you want to plot that 409. Let me make sure. Let me just go back and check, because I'm gonna have that one person that says not. So let me go ahead and go check real quick. You want to plot the opening price. Put that in your notes. Plot opening price. And you're gonna see why this level is significant. So today's SPY's opening price was 409.49. So we want to go ahead and plot that. 409.49. We could just put it right there. And I always change this color to a different color, so I know that that's the opening price, right? Let's go ahead and plot that. Boom. OBR high and low. I don't know what RORB means. This is the simple opening price. Like, where did SPY open today? So now the rule of thumb, now put this in your notes. After you have plotted the opening price, this is a day trading strategy, open range breakout. Oh, I never knew that. I just call it the opening price. So what you want to do is you want to plot down the opening price. So now the rule of thumb is, if we break above the opening price, you go long. Let's say we break above the opening price, this is really a call strategy, but it's a way you can use it for puts. If it breaks above the open price, you can go long. And then let's say that it breaks above the opening price and break back below, you can run puts. Or obviously we know we can run puts between the previous day's lows. But I'm about to just show you like exactly what I meant. So right now I got that plotted. So that 409.49 level is where I will look to take calls. So as you can see, let's play throughout the day. Let's see how that level played out, right? So as you can see, we letting the day go by. Boom, right there. As you can notice, what do we do? Did we break above? We broke above, right? Hold on. First of all, this is not even my execution time frame real quick. Let's go here. Okay, so this is why I use the 10-minute. You can see the 10-minute made a huge difference. So look what happened, guys. So as you can see, that opening price, this is why I use the 10-minute, so I don't get faked out like that. So as you can see, we just wicked above. We didn't actually break above. A full candle did not close above. We just wicked, right? Not gonna lie, I did do some stupid stuff. I went ahead and tried to take this trade, and I did get shooken out, but it's all good, right? So do I think to run puts though? People see wicks like this and they automatically think puts. Can anybody tell me why I wouldn't run puts in this situation? Because I know when people start seeing wicks like this, they start thinking puts automatically. Why wouldn't I run puts? It's not below the low of, it's not below the, it couldn't hold the, it couldn't break below the previous day's lows. This is previous day's lows. It's still holding that support, right? And it's choppy, right? It's not giving us any confirmation to take puts, right? It's not ready yet. If you want to take puts, it's not ready yet. It has to break between this low, right? So as you can see, it was holding this low all day long, right? So let's keep going. So the play that and also the reason why we would look to take calls is still valid, right? So let's go ahead and keep playing it. So as you can see, right, it's starting to hold it. Now at this time, what do it look like the stock is now creating? And get nice tip. Somebody said it's showing buying pressure, right? So now what did it look like it's about to do? Like, let's be honest, look like a double bottom, right? It couldn't break the previous lows, right? Let's say that we were starting a downtrend, right, of higher highs and higher lows. As you can see, when it came to make this lower low and then we made a lower high, what happened? What happened? It couldn't break the previous lower low, right? It couldn't break it. It couldn't create another one. So now the little downtrend that it was starting is now invalidated, right? It can't break it, so it ain't nothing. The trend is now starting to change. So now we created a double bottom. Does everybody see what I mean? It's uptrend, but I'm saying it started a little small downtrend, a little small one, not nothing crazy, like a little intraday downtrend, nothing crazy. But it started creating a double bottom, right? So at this time, you know, now we starting to see like, all right, that's why I tell you guys, stop having your charts like this. Zoom out, play with it a little bit, right? Zoom out so you can see the bigger picture, right? It was double bottoming all day. Literally, it was double bottoming all day. This should have been a trade that everybody should have been able to catch, right? So let's go ahead and fast forward. Remember, we want to take calls above this opening price. We shouldn't have got shooken out of this trade because guess what? If we stayed true to our rules, one of my rules is taking it over the opening price. It never broke above the opening price, so it was no reason to take this trade yet, right? So we want to go ahead and wait for it to break. So let's keep it playing. Boom. Now, can anybody, now we're starting to break that opening price. Now we look like we have a strong little push, right? We having some candles go. Now, can anybody tell me what it looks like we're starting to do as well with my EMAs? Golden cross, right? That is what is a golden cross? What signal is that? That's a signal to do what? Oh, it's bullish, right? We're thinking calls now, right? So as we start playing fast forward in it, what happens? We finally close above. Now we're in this trade. Our entry is there. You know, this is literally we taking it over the opening price. Now, where is my stop loss, right? We want to evaluate our risk while we're taking this trade. If I'm taking this trade above 409.49, our opening price, where is my stop loss? A close below what? The opening price. There we go. That's our support now. A close below the opening price. So now knowing that in the back of my head, now we can assess our risk to reward, right? So we know that if it breaks below, we're going to cut the trade. Now we use our targets to assess, is this risk even necessary to even take, right? Is it necessary? Is it worth a trade? You have to ask yourself that. Is it worth my money? Is it worth risking my money, right? And we have all our targets here, but let's just say our first target right here. That's our first target. Can anybody tell me where am I getting this target from? What is that target? Yes, it's a level, but also what is it? If this is a double bottom, what is that? The neckline. And I tell you guys all the time that the neckline for anything you do, a double top, double bottom, any of that, the neckline is always going to be your first target. Always, 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 always. The neckline is always going to be your first target, right? So that means that we have a double bottom, and I'm going to draw an example right here. I preach this because it's like money right here. This is literally easy. This part is easy. Not like I said, trading is not easy, but that part is normally money. So we have a double bottom, right? Normally, 90% of the time, our first price target is going to be there. It's most likely going to go there. 90% of the time, it's going to go to that neckline. So it can do this though. It can actually go to the neckline, and it can do two things when it get there. It can either break up and continue to go up, or it can go down, right? But anyway it go, we know that that's the point that it's going. So it don't matter what it do. We know that we're going to trim most of our position once it get there, right? So if it does decide that it don't want to break, we go ahead and cut the rest of our position and we go by our day. But if it does decide to break, we can go ahead and hold our runners, right? I want you guys to understand that as I keep going. So now let's let it play out a little bit. So we know the neckline is our target, right? Boom. So let's keep going. There's no reason for us to get out this trade. It hasn't hit. No reason. Look, it's starting to pull back. Why am I not getting sick out this trade? I'm so glad somebody said this. I thought you were supposed to wait and enter at the neckline. I'm so glad that you said this. I just had this conversation earlier today. Can anybody tell me why I personally don't like to enter at the neckline? I'm so glad that you said that. Everybody buys at the neckline, right? Everybody buys at the neckline. Everybody buys at the neckline. So guess what? We bought on this break here. Most people are not going to buy there. The contracts are very cheap right here. By the time you get to that neckline, you know, everybody's starting to buy at that neckline. So what happens is you're buying the contracts at a more expensive price. Then you have the chance of it rejecting. And now it's going to hurt you even more because you bought it at a more expensive price, right? The IV spikes start kicking in and everything, and you're buying in on the IV spike. So if it doesn't go your way, then you know you lose out even more money. And I ain't gonna lie to you guys, I trade weeklies. Buying at that neckline, if that neckline reversed, this is an automatic -50 immediately. -50 immediately. Like the contract going to shit basically if it don't break right there, right? So that's why I like to buy down there because I'm buying at a cheaper price. Somebody said it today in class. They said, so basically you be flipping contracts. It's pretty much what I do. Like I'm buying, the whole point of the stock market is to buy things low and sell it high. So why the hell am I buying the contracts high and trying to sell high? You know what I mean? The whole goal of the stock market is to buy low and sell high. So I treat the contracts the same way. So why the hell would I buy the contracts high and try to sell it high? That makes no sense to me. And I tell my mentees this, right? Most people, like I said, not down in nobody, if you do buy the neckline. You know that some people might say that's safer or whatever. That's totally fine. However you want to do it, that's fine. That's fine. This is just how I want to do it. And I put it this way: one of the statistics that I seen was 90% of traders are not profitable, right? And can you understand why? One of the things is 90% of the traders are using the same exact strategies that don't work. You get what I mean? So it's kind of like, why would I do the same thing then if everybody taught to do the same thing if 90% of traders fail? So it was just my way of trying to see like, well, I want to do something different. I don't want to do what the 90% do. So that's kind of what my thought process was on buying at my type of entry, right? And it's been working for me, right? I'm not down to nobody's strategy, but this is what works for me. Somebody asked, can I go over the thing one more time? Let me go over it one more time. The entry. So let's start the day off again. I didn't want y'all to see the rest of it, but let's go over one more time. So the market opens. First thing we did was plot that open price, right? The open price. Remember, above the open price, take calls. So as you can see, boom, we just watching the opening price. Setting our alerts. We don't even got to watch it. There we go. It's still holding support. It hasn't broke yet. Boom, we wicked above. We couldn't hold above. If you did take entries here, most people probably would have. It's all right. You didn't have much confirmation to take it in the first place, but if you got caught in it and you got shooken out, that's totally fine, guys. Exit the trade, get back in, right? Boom. So you took a loss. So you did. You took a loss. Still holding, still waiting for it to close above that opening price, right? There we go. Now our EMAs are starting to get. Also, this is another rule of thumb, guys, that I tell my mentees all the time. What is one thing, guys? What do I tell you guys? Below the 9 EMA, what do that mean? Below the 9 EMA, what do that mean? Bearish. Above the 9 EMA, what do that mean? Bullish, right? So as you can see, we were still holding below that 9 EMA this whole time. We didn't actually break above the 9 EMA into this candle. So technically, you shouldn't have gotten in the first place. We didn't really hold above it. We closed above on this candle. Y'all can see that closing. On a bullish candle, we start from here and we closed above the 9 EMA if you look there. So we're here, we never closed above it. So actually you will start looking for entries anyway as we got in here. Now, the next question was why didn't I buy at support? Now, there's two different ways I could have took this trade. I could have bought at support, right? I could have, but I'm not gonna lie. The current market we've been in, it's been kind of hard to buy, like, and try to anticipate it sometimes. It's been kind of hard to kind of buy it because sometimes we try to buy it and then the stock can just go lower. Like if you would have bought it here, that's fine. Your stop loss would have been below. There are times where you guys know, like if you've been trading with me over this last year, I will buy it at this support. But it was kind of choppy. So for me, it was kind of hard to kind of say I want to buy it there. So just to make my life a lot easier today, make a stress-free trade, I just waited for it to break above the opening price. And I'm gonna show you some examples of the opening price. I used the 10. So the next question was, are any reason why you changed from the 15-minute to the 10-minute? The 10-minute for me has been the most beneficial, right? Simply because it gives me a quicker entry, as you can tell. Like it gives me a quicker entry, and it's just a lot faster. And it just, like, I don't know what it is. It gives me, like, it's really just a quicker entry, right? I mean, it's not too fast and it's not too slow. The 5-minute is too slow. I mean, too fast, like a lot of fake outs. The 15-minute is sometimes a little too slow. So the 10-minute was kind of that middle ground that allowed me to be able to get in my trades quicker and still be able to hold long enough to not get shooken out, if that makes sense. You buy weekly only. 98% of the time I'm in weeklies. But like I said, the reason why I'm in weeklies is the way I trade. I take the risk off of weeklies. Weeklies have a bad rep because of the pullbacks. But as y'all can tell, the way I'm trading, I make it where weeklies aren't that bad because weeklies are cheap when a stock is not going that way. Weeklies are cheaper. And when a stock do go that way, I get a higher return. So for me, but like I said, I'm not here to teach you any type of way to do it. If you want to buy time, you can always buy time. You always can buy time. There is nothing wrong with buying time. I buy same week expiration. There's nothing wrong with buying time, though. I'm not here to teach you guys something differently. I'm just here to let you know what I do. You can definitely buy time. To me, weeklies are a lot cheaper. So in a way I trade retests instead of breakouts, kind of. So in the way I trade, it kind of allows me to like take the risk off of weeklies. You just have to know how to trade it, and your entries just got to be better. That's all it is. But yeah, 98% of the time I'm trading weeklies. Like I said, I'm gonna give y'all an example. When I told y'all, I gave y'all an example when I traded monthlies before. Like Square had dropped $8, bro, and I had literally made 20%, and the damn weeklies was up 400%, and I was just like, I put in the same amount. So I was just kind of mad about that. So I kind of just like stuck more to weeklies. I'll make sure I didn't answer missing questions. When you draw your green and red areas for risk, how do you do that on TradingView? It's a little tab. I actually got mine's favorite right here so I can use it automatically, but it's a little tab somewhere. Y'all know I'm new to TradingView, y'all, so don't ask me that many questions. Here it is, right here. This long position thing over here. It's the 1, 2, 3, 4, 5, 6. It's the 6th column, and you go in here for calls. You do long position. For shorts, you do for puts. You put short position. How many DTE? How many DTE? I'm not sure what you mean by that. Days to expiration. It just depends on the trade. So this was a day trade. So I went the same week. I didn't have to pay extra for this contract. How do you do it on TOS? Okay, so on TOS, I actually make them myself. I don't think TOS has that. Yeah, I just draw on myself on TOS. I just use the rectangle tool. How do you set a stop loss? So I'm not going to go over that this class. I can see you a video, but I definitely can show you guys, at a later class on how to use stop loss. I'm using a 9 EMA and the 21 EMA. How did you get the profit? I just said that. So it's the 6th column tab on the left, and you just go there in long position. It's like this little thing right here. Long position is when you got the little thing going up, and short is when you got the thing going down. All right, so let me get back into the trade though. Sorry, we took our entry as we were breaking above this right here, stop loss right below. As you can see, we drew it in our rich box. right here. Can anybody look at this and tell me, do it look like we have a great risk reward here? Do it look like we have, like, I want you guys to literally look at this trade before we take it. Do it look like we have a great risk reward here? Right. Like it's that clear. Start getting used to drawing these boxes. We got great risk reward. So at this point, like this, and the reason why people might think this is silly to keep drawing these boxes and stuff, guys, if you start drawing the boxes and start understanding how much reward you're going to get to your risk, guys, it'll cause you to start taking those trades. Like it'll literally, like it's a mental thing. It will mentally prepare you to start taking these trades because you're understanding that right now this is a 13. This is a 13, right? So potentially we're risking 1 to make 13 in a way, right? Let's be honest, you know, you'll get better at it. But overall, we're looking at our risk is so minimum to our reward. So in my mindset, this makes me emotionally trade. Like I said, trading is a mindset game. So this way it helps me with my mindset. One of the things that people will tell you about me, I'm not afraid to pull the trigger on a trade. And this is why. This is literally why. TD, yeah, they said, everybody already know my slang is TTDT, take the damn trade, right? People were so afraid to take the trade. This is literally, you're going to risk your money. So make sure that it's worth it and just take the damn trade. If you lose, you lose. One thing about it is, I'll put it this way. If you manage your account properly, you put in the right amount of risk that you're okay with, losing won't even sound bad. I think what the problem is, most people are trying to find a trading strategy so they don't lose. That doesn't exist. You can't, you're going to take losses in this game, right? So why not take the best losses? Take the best losses. If I lose, if I'm taking a trade on here and I lose, I know this was a good loss. This was literally a good loss. I had a nice risk reward. If it rejects, that's fine. This was a good loss. So all right, let's go ahead. Let's play it, right? We took the trade. We're entering here. Now we want to ride it up to that neckline. Nice candle. There we go. Nice candle. I'm not taking profit yet. I'm not taking profit. I'm letting my winners run. I wanted to get to my target. I'm not taking profit yet. Letting my winners run. Look, at that pullback, this is where people get shooken out at, right? They get shooken out on these pullbacks. It pulled back. Why am I still holding this trade, guys? There's 2 reasons. Why am I still holding this trade? There's 2 things, 2 confluence that's giving me to hold this trade. What is it? Above the EMA, that's number 1. What else? We got golden cross. We're creating a higher high. Exactly what else? I'm looking for it. Yeah, I'm still holding full position right here. It has not hit my target. Okay, I think, thank you. There we go. I was finna say, there we go. Play still valid. Play is still valid. If we took a double bottom, it is still valid. So let's go ahead. I'm holding full position. I'm not taking, I'm letting my winners run, right? If you wanted to, now this, I'm glad somebody asked that. They said not even close to your stop loss. Now, if you wanted to, they're saying if you wanted to, you could, which I do recommend. If you're new to trading or you're just having a hard time, if you hold losers too much, I highly, 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 highly recommend setting your stop losses at break even. Setting your stop loss at break even. I highly recommend that. So if a trade start going your way, set it at break even. As soon, a lot of people do this as soon as it go into profit. So I'm gonna have to do a class over it. But one of the ways I do it the easiest way, because a lot of people execute from their phone. Let's say that I bought this trade. If actually this trade, where was this trade at? We bought this trade at $300 per contract. I think it was around here. We bought it at 300. What was it? $300 per contract, guys? It was something like that today. $300 per contract. So as we went into profit, what we could have did was we could have set our stop losses right there at 300. You literally go into TOS, Think or Swim mobile app, and then you go there, hit stop, and then you put your ability, the price you bought it for. If you want to, if you're real petty about it, you could put it a little bit above it so you can factor in the fees for the contracts or whatever. If you really that petty, I'm not that petty. But anyways, you set it for that break even price. So that way, now if it starts pulling back, it'll stop you out at break even or close to it. I'm not gonna lie to you guys, it's not gonna stop you off exactly at the price you want to get out of it at, but generally it's gonna be, it's gonna be pretty tight, most of the time. So as you can say, you can set your stop loss. I do recommend that for people that's still in trading, that's still getting used to emotions and all that. I do highly, highly, if you don't take anything from this class, take that. Practice setting your stop losses at break even. You can't set it at a percentage. You set it at the contract price. We're not trading shares. Literally, I will set it as soon as I come into profit. Like as soon as you get into profit, set it. I kind of like to let it run just a little bit, just because sometimes you will have, if the stock is breaking the level, sometimes the next candle might wick it to like stop you out before it to keep going. So I kind of like to let it run a little bit, then set it, but it's all depends. I'm gonna show you how to make the boxes. But anyway, let's go back into the trade. Let's not get off topic. So if you want to set your stop loss at break even, I do not use trailing stops at all. That's something that I will look into in the future, but I just haven't used trailing stops. I heard that's something that similar to what I'm saying to do. But yeah, I haven't actually used it myself yet. So as you can see, I'm still in full position. You know, that's my target. I want to hold. I want you guys to get used to trusting your charts, right? Trust your charts. You shouldn't be looking at your P&L here. First of all, you should not be looking. That's one of the key things I have for growing your account. Yes, I do wait for the 10-minute to trade. Yes, I do. Yep. Yeah. So anyway, so yeah, we get used to trusting your charts. So you put a line after the opening candle. I put a line at the opening price. So what you can do is hover over the candle, the opening candle if you want to, and it'll tell you what it opened up at. Or you could just go on Robinhood. It's all up to you. I just use Robinhood. If you don't want to use Robinhood, TOS, same thing. Just hover over the candle and just there you go. So here we go. Let the trade run, right? Trust your charts. Still above the 9 EMA. As you can see, what happened? What happened? What happened? Look at that. What happened? Now we trim. Now we trim. It still was above the 9 EMA. The trade is still valid. There we go. It hit our target. Now we're trimming. We're selling it to strength. You get what I'm saying? Right? If you would have stopped out right here, you would have started taking, oh, I don't like that it's pulling back. You missing out on opportunity. You're missing out on opportunity. You have to get used to trusting your charts. You say that it's going there, let it go there. I'm telling you, how many times have you guys sold a trade too early just to see it keep running? How many of you guys did that? How many guys have you actually sold a trade too early just to see it running? No people say today, right? You have to get into a habit of trusting your charts. You do all this work for nothing. Get paid for what? Get paid for the work, right? You did all that chart. Get paid for your work. How you know that the play is still valid though? It's still valid because it never look. We took it because of the double bottom, guys. So the only way technically that this trade will be invalid. Well, actually, let's say this. We obviously see that it's a double bottom. So if you took it here, the only way this trade will be invalid is if it break below this double bottom. But if we took it above this 409, this opening price, the only way this trade will be invalid is if it breaks back below the reason. Like, don't complicate it. I know I'm gonna have people complicate this where I say, how do you know if it's invalid? This is how you know if a trade is invalid or still valid. If the reason why you got in is no longer valid anymore, that means the trade is invalid. If the reason why you got in is no longer valid, the trade is now invalid. If the reason why you got in is still in play, the trade is still valid. So guess what? Let's make that into simple terms. We only got in because 409.49, our opening price. We got in because it broke above that, so we took calls. So now the reason why we would get out is if it breaks back below that. That's kind of the rule of thumb, right? That's why entry is so key. Yes. So there we go. We broke that level. We're trimming, right? We're trimming. Now, this is a key right here. Now that you're starting to trim, I normally trim 50% of my position. As you get more, I'm gonna be honest, guys, as you get more into trading and be a little more confident in what you're doing, sometimes a lot of traders that's been doing it for a minute, they're not going to trim at this first level. They're going to hold, right? And that comes with experience and just confidence in what you're doing. But I like to tell people, always trim at your first price target. Always, always, always. Especially if you're trading a double bottom, always trim at that neckline. Get used to trimming contracts. Now, I have somebody say this earlier in class. They were like, well, Jay, what if I only bought one contract? Well, I have two things to say. That if you only bought one contract, then I would highly recommend taking profit at your first target, because obviously if it pulls back or if it does something, obviously you're going to give your profit back, literally. Now, but I do put it this way. I personally would not trade a stock that I can't afford multiple contracts of. That's just me. So if you only can afford one Amazon contract, then I probably will not trade Amazon. That's just me personally, right? Because you want to still be able to catch those moves. So if you only can trade, I like at least two, right? You want at least 2 to 3, really 3. But like then again, you're talking to somebody that buys 200 contracts of almost everything. Like almost every trade that I'm in, I'm buying 50 contracts minimum of almost every trade. Like I swung Tesla. I know I put in the little telegram that I bought one, but everybody know me. If I say that I bought one, I most likely bought more. I'm just telling people so they don't YOLO their accounts. That's all it is. But yeah, I normally buy, 50 to 100 to 200 contracts, sometimes even 500 contracts. What strike price would you have bought when it broke over 409? So now on this one, I bought the 410s. I bought the 410s on this one. Just because, like I said, if I'm trading breakouts, I want to take more at the money or closer toward that strike price. I mean, closer to the stock price. So not technically in the money, but like at the money kind of deal. So I took the 410s just because it was right there, a lot less risky. Also, with the market being as choppy as it is, I kind of didn't want to go too far out. But the 415s would have worked on here because, as you can see, 415 was originally my real target for today on SPY. But normally the rule of thumb that I tell people, pick the strike price that the stock is going to. That's kind of like the best advice I got for you. Pick the strike price that you think the stock is going to. So if you don't think, like, for example, and this keeps people from going too far out the money. If you don't think that SPY is going to 450, then there's no reason why you should be buying the 450 contract. You get what I'm saying? So that way it's a lot easier in your contract selection, if that makes sense. So anyways, all right, so we're selling into strength. That's one thing that I always tell people, get used to selling into strength. This is one of the keys that has helped me tremendously in trading, selling into strength. The reason why you want to sell into strength is because you're going to get filled out quickly, right? The problem is, and I used to have this problem, so don't feel bad if you still have this problem. When I first started trading, I would literally hold until I seen another candle go, like it start pulling back. So what I meant by that is, if a stock price is going up, I was literally holding until it started pulling back, and then I would try to hurry up and sell once it started pulling back, just to see me not get filled and have to deal with it, keep eating my gains away. Then it finally filled me all the way at the bottom, right? So my rule of thumb is to always sell it to strength, right? Always sell it to strength, so you don't have to worry about that. I don't think any of the people that I've trained or anything has this problem anymore, because we all know to sell into strength, right? Sell if you're in calls, sell on green candles. If you're in put, sell on red candles. Put it that way. A lot of people do the complete opposite. They want to sell calls on red candles. They want to sell puts on green candles. No, sell calls on green candles, sell puts on red candles, right? So as you can see, we're trimming. Now, can anybody tell me, now that I'm trimming, right? Now that I have my runners to run even more, where would I cut my runners at? This is key right here. Where would I cut my runners at? Neckline, that support, right? It broke that level. So now because a lot of people, they don't understand runners. What happens is they thinking like, oh, if it's a runner, it can come all the way. No. You want to still keep your money, right? You still want to keep your money. So now if we got runners and we keep letting them run, now each time it breaks a level, that new level is our new support. So now every time it's above that level, I will cut them if it falls back below. So now that we're out 50% or whatever, yeah, and you can have a trailing stop at this point. Like I said, I haven't used them yet. I just keep raising my stop loss on my own, but trailing stops probably will solve this problem where you don't have to do it. But normally I do it by myself. It just depends. So as we see, we let this trade keep running. At this point, if you want to adjust your risk box, we achieved the first one. Now we can extend it because now we have a next target, or you can just extend to all your targets to kind of see. 415 was originally my target for today. So as you can see, we let the trade run. Boom. We never closed below. We kind of had it a little bit close below right there. But can anybody tell me, my bad, just quick transparency. Can anybody tell me why I still was able to hold this trade? Now, there are times where you will have candles fall below. I'm not going to lie. It depends on how much size I was in. I would have probably took profits or whatever. But one of the other confirmations that I had was we still held this EMA. So for me, it's kind of like a personal thing. If you would have just took your runners out right here, that's okay. You're never going to catch the whole entire move. Y'all get what I'm saying? But generally with more experience, to me, if it's holding above the 9 EMA, And if it does fall below and I kind of already out a lot, I'm gonna kind of just let it run. It ain't really show me any bearish signs. It's still in the uptrend, so I kept holding. As you can see, there we go. Now next target, we're out, we're trimming, we're selling into strength as it's breaking this level. We're selling into strength. As soon as it tapped that level, start selling. Hold on. Hold on. Somebody asked something up here. If it falls below, do you wait for the candle to close or you get out as soon as it breaks? Okay, so I get this question a lot. I try to wait for the candle to close, but sometimes depending on my size or how many runners I have, I'm not gonna lie, if it kind of just wick below that level or just go below that level, I'm gonna just cut. Just because sometimes when you wait for that close below, I ain't gonna lie, if a stock, most of the time, if a stock closes below, that next candle is gonna be massive. Like that next candle gonna really try to take your money away. So sometimes, like depending on how much size I got, I kind of just go ahead and just like if it start like this candle, I would have probably already been getting ready to get out. If it wasn't holding above this 9 EMA, if that makes sense. Just a quick disclaimer right there, because I ain't gonna lie, it's those candles be brutal. All right. Also, somebody asked me, and I'm not going to go too much over candlestick patterns, but somebody asked me, was this a morning star? This is a morning star, but guess what? Can anybody tell me why this morning star is invalid? Ooh, I want the mentees to ask me this. Not at a downtrend. There we go. It's not a morning star because it's not at the downtrend. It has to be, a morning star has to be at a downtrend, right? It has to be at the bottom of a downtrend. It's a bullish candlestick pattern. Bullish candlesticks are at the bottom of downtrends. Did you say this strategy works best for calls? This is a taking it over the opening price. So it just happened. I'm gonna show y'all some put examples of using the opening price, but you need to incorporate that stock's opening price in your trading strategy. So let's go ahead and keep running. As you can see, we trimming more contracts. Most of the time, I kind of like take the rest of my position here, but you can still have runners if you want to. Boom, let it run. There we go. There we go. Still holding that support. See, this is a better, right? You see how it's still holding that support. So it was no reason for me to sell my runners because you see how it was holding. This is a lot better than that little fake out that you had right here. It's all good. It's still above the 9 EMA. So we're still in this trade. If we have runners, we're still in this trade. Boom. There we go. Never close below. Look at it. Never close below. Holding at 9 EMA. There we go. There we go. And here we come. And hit our target. We're out. Right? Mainly, most of the time, I'm out of my trades after 3 targets hit. It's rare as hell if I hold past that. Normally, after 3 targets hit, I'm pretty much out. Right? And there we go. The trade is now complete. Now, it could have kept running. Understand, guys, because I had people get mad about this. Like, look, it's going to do some extra stuff probably. Hold on, I think it is. I don't remember this. Let's see. Okay, so it even continued to keep going. Most people beat themselves up about it. Honestly, guys, I'm out this trade. I'm normally on my 3rd target. I don't really care about anything else. And it hit the top of that double bottom neckline anyway. So at this point, I'm out this trade. Normally, I'm at 3 targets and I'm out. And then, as you can see, it pulled back a little bit more. Then it finally continued to continue up. So, now somebody asked about how much did the pullbacks hurt your contracts. Now, I'm not gonna lie, the current market that we in right now, these pullbacks definitely be hurting. They don't be like they be hurting. I ain't gonna lie to you, they be hurting. But generally, if the stock is kind of just pushing your way, remember we bought them pretty low. So yeah, it pulled back, but at the same time, these contracts still finished above 150%. So overall, it still was a great trade. If it wasn't for those pullbacks, like the kind of market we in right now, this would have definitely probably been a 200-300% trade. But overall, the pullbacks wasn't too bad. Do you watch other sometimes it depends. Normally, if I'm taking a day trade, I'm gonna just stick between the 10-minute and the 15-minute. But generally, I kind of stay on those for day trading. Swing trading, I come to the hourly. So later in the day, the question was later in the trading day, If it's well past the opening price, is your entry going to be as support? Yes. So I'm about to show you an example with Tesla using the opening price in a minute. And this opening price, like, or for example, if you're using the opening price, this level is going to be valid until it's reached. So let's say that it was the opening price at let me just show you an example. So let me show you this Nvidia real quick. Okay, so this is how the Nvidia, I didn't take this trade, but I'm showing you I was supposed to, I just didn't look at it. But this was the Nvidia trade. So right here, let's make our level. Let's say kind of the same way. This is our opening price that day, right? You always want to pay attention to those opening prices. And as you can see, you don't want to, that level is still there until it's finally broken, if that makes sense. So we want to plot that first opening price. Let me, hold on, I'm doing it so wrong. Right there. Okay, so this opening price right here for Nvidia, I basically told the chat, I said, hey, I told them on, what was it, Tuesday? I said, I want to take Nvidia over 189.80. And that was the that opening price. So as you can see, over the last couple of days, we never really broke above it. So that level was still valid, right? If the opening prices never really broke above, that level is still valid, guys. It's never been broken above, right? We had a little wick above before, but like I said, it has to actually break above that level. So as you can see, it hasn't broke above that level. It just pretty much rejected, 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 rejected. So officially, you know, after 3 days of rejecting it, it finally tested it again. And what happened when it broke? It sent immediately, right? It sent immediately. So that's why I say set alerts and wait for that opening price to be broken. Take calls. There we go. We had a bull pennant right here. Took the trade right there. Is the opening price the body, not the wick? Yes, it's the body. Yep. You mean any day's opening? No. So whatever. So let's say like right now, Nvidia's opening price, that previous opening price was never broken until today. So now tomorrow, now that's when I make a new opening price. Y'all get what I'm saying now? So like tomorrow's opening price, whatever Nvidia is going to be at, that's going to be the new level until that level is broken. Y'all get what I mean now? Is that starting to make sense now? Yeah, like that. So that's how you do it. So now that level, and now you keep the level, you can keep the previous opening price, because now that's going to most likely be a support at some point. But now, since it already broke that level, now tomorrow, I'm going to do the same thing. Nvidia's open price, if we break above that, then I'm going to think long as well. No, I'm referring to the, it depends, the previous opening price. So if it never broke it, then I'm going over that opening price. And I can get more into detail. I can send y'all an article about it a little bit that explains it a little better than I'm probably explaining it, but don't overcomplicate it, right? I'm just taking it like, taking it. Hold on. I got a lot of questions. I knew that was going to confuse people. Hold on. Oh, I got a lot of questions. Okay. So later, no, I already used that. Trailing stop. If you use trailing stops, would you stay in after your third target? Yeah. If it was me, if I were using trailing stops, I would just let it run until I'm stopped out. That's kind of how trailing, that's like the best way to use trailing stops. Use it until you can't use it no more. Do you leave your pre-market data on with your EMA? Yeah. I'm not a big fan of pre-market like I used to be anymore. You know, back then, last year, we used to be able to use pre-market highs and pre-market lows. That doesn't work at all anymore, in my opinion. Nothing works better than the opening and closing prices. That's just my personal opinion. And previous days highs and lows, that pre-market stuff just it ain't the same no more. So you use weekly contracts for your day trades now? Yes, I've always have. Always use weekly contracts. For me, like I said, you don't have to. You don't have to. That's just what I like to do. I like higher percentage returns. Just understand, if you're going to be using weekly contracts, you have to focus on entries and exits. That has to be your main priority. So on that break, did you take it immediately? There's two different ways. So you can take it immediately if you want to, and just understand that you could be stopped out, or you can wait for that candle to fully close above. To me, it kind of just depends on if that candle was a nice candle, or normally I try to wait for a close above or look at where see my EMAs at. Do I have any more confirmation telling me that we're going to go up kind of deal? But normally, it depends. It kind of just depends. But if you're new, just wait for a candle to close above. That'll save you so much trouble. So less trouble. Do you expect SPY still to run up because it closed at 417? I can check in a minute. I do believe that SPY is going to continue to run tomorrow. So you're referring to the previous days? Yeah, I didn't trade Nvidia today. I did not trade Nvidia today. I definitely missed this trade, and I'm so mad because I had already. This was my number one. This was my trade of the week. I always have a trade of the week, and this was plotted as my trade of the week. And I was too busy trading other things. I forgot all about it, and that's why I tell you guys, if you build a watch list, focus on that watch list because you miss out on great opportunities. Like, this is a great opportunity. I have been waiting on this trade all week, so I kind of missed it. Trying to like be all over the place. Actually, I think this happened when I was on class as well earlier today. I definitely missed it. That's my fault. But yeah, don't overcomplicate entering, guys, right? If it breaks above, take the trade. Don't overcomplicate it. Use the bigger time frames. For me, I use a 10-minute to enter. It's a lot quicker. The 5 minute shakes me out too much. Also, understand when it comes to entries, and this is definitely a quick little gem for you. If it breaks back below why you enter, just cut the trade. Like, I don't know what it is with people and they don't want to cut the trade. Just cut it and re-enter. Literally just cut it and re-enter. You don't have to hold a loser. That's why people be scared to enter trades because they so scared. Like if it falls back, like no, if you entered and it start pulling back on your entry, if you got into early, cut it and re-enter. There's a lot of trades that we take where we end up holding too long, and we actually realize that if we would have just cut, we actually would have been kind of happy. Just cut the trade. Like, I'm not about to come on here and sugarcoat you guys like, oh, this is the best way to enter a trade. Like, no, like if you have a level, if it closes above your level, take the trade. And if it just happened to fall back below it, cut the trade. Like, I'm telling you, I'm not here to give y'all some false dreams about, the entries. Like if you get in, right, it's all about like just cut it and just re-enter. If you sizing correctly, this shouldn't scare you. If what I'm saying is scaring you as far as like entering, that means you're going in with too much size. If what I'm saying, like if I'm literally telling you, like if you get it a bad entry, just cut it. If that's scaring you or make you feel uncomfortable, you're playing with too much size. You need to lower the brokerage account. This is all mindset. Lower the brokerage account. Yes, I use the 10 minutes to enter. I got you. I can walk out through. Can you break down that big or in your case trade of the week setup? Okay, I'll break it down in a minute. I got in on the 9 EMA bounce before the breakout candle. Would you have done the same? Yeah, I ain't even gonna lie to you. Yeah, sometimes. Sometimes I would have definitely gotten this trade probably a little early. Just because it had the setups that I like. Definitely we had a bull pending at the above the 9 EMA, got a little 9 EMA bounce here. It didn't touch it automatically, but I ain't gonna lie, I would have probably gotten this trade pretty early as well. I probably wouldn't even waited for this candle. I'd have probably been in here because it started bullpenning. As you can look at these other examples of when it tried to break, it did not create any type of chart pattern at all. At all. Literally, it didn't create anything. So it kind of wasn't like that gave me that extra confirmation to take the trade, right? This never gave me a chart pattern, if that makes sense. So can you yeah, I can do that in a minute. Here's a 10 guys get a cash account. Did I go back too far? Oh yeah, I did. I went back hella far. Hold on. Yes, if I'm day trading, I'm using the 10-minute or the 15-minute to exit as well. Play with the time frame, guys. See what time frame you like. For me, I like that I can use the VWAP on the 10-minute time frame. So that's kind of one of the benefits I have. I'm not going to get into VWAP too much because I would be lying to you guys if I tell you that I use VWAP like that. But in some classes, I don't only use VWAP if I'm scalping, but everybody that knows me knows I don't like scalping that much anymore. If that, like, I just don't like putting all my money into a trade and making 10% profit. That's just not me. Like I said, if I'm gonna put $20,000 in the trade, I want the highest return possible. So scalping just not for me personally. Yes, I customized trading view to get it. So I came over to the 10-minute, I came over to where you got the time frames. And at the bottom right here, it says minutes, and then it has a 1 next to it. I just typed in 10, and then boom, the 10-minute time frame popped up. My bad, y'all. Yeah, you just go in there, you can edit it. Do you think QQQ will continue to be bullish tomorrow? Yeah, I think it could. I think the market is actually going to be pretty bullish tomorrow. That's just my opinion. I can't really tell. Just looking at the setups and stuff that we have today, I do think the market could have a nice push tomorrow. I will hope that it's having a nice push tomorrow because I definitely in Tesla calls. But I don't see any much bearish kind of confirmation right now. I don't see anything telling me bearish right now. But like I said, this market with swing trading, it can be a whole new market in the morning. So we just gotta wait and see. Amazon, I think Amazon stock split is tomorrow, so that could give us a little catalyst. Might have a nice little run up as the stock split happens. People are gonna be buying shares or whatever. So there's different things that can happen. So we just have to wait and see. But so far, right now, the charts are telling me more upside, right? So we just have to wait and see tomorrow. SPY still was holding 90 and made the whole entire time, even closed above it. So that's something that we want to watch out for. Tesla closed right above support. So definitely want to definitely think tomorrow could be a nice little run up. Who knows? I understand we only have 3 trades per day for 5. So cash account. Yes, get a cash account. Get a cash account. Okay. If something is running up, how do we enter and get a piece of the move? Great question. So the question was, if something runs up, how do we get a piece of the move, right? The way to do that is to understand you want to buy at you want to buy at the corrections, right? You want to buy. So normally stocks move in waves, right? We have an impulsive move, correction, and then another impulsive move. So your job as a trader is to identify when the stock pulls back to be able to enter that move and be able to catch a nice move, right? The problem is a lot of people try to get into here and you never know when the correction is going to happen. So you're pretty much just gambling at that point. You want to buy on pullbacks. So as the stock continues to go up, you want to get used to buying on pullbacks, right? Or retest. If a stock breaks a level, wait for it to retest that level, right? I'm finna show you Tesla real quick. This is why I swung Tesla. If you swung Tesla with me, this is why I swung it. Hold on. Do I know it's going to be a winner? No. I just took the trade, right? Tesla, pretty similar to Nvidia. We took it above that opening price. Well, actually, this trade was a little different. I bought the retest instead of the breakout. You could have bought the breakout, sold it to the next target. But like I said, I'm not a big fan of breakouts in the first place. I like to take the retest. So what happened? We was rejecting that level pretty much all week, right? Then we finally broke it. And what did we do? We pulled back right into that level and we retested it. So what did I do? I bought calls, right? We held that level. Stop losses right below. Look at my risk reward for Tesla. Now it's a swing, so this definitely can go by pretty bad. But this is my risk reward for Tesla for tomorrow, right? I'm taking the bounce. We literally retested that level. We broke that level, retested that support. I'm buying a retest, and now I'm thinking that it's going to go back to that high. I took the trade, right? Stop loss right below. So as you can see, this is literally, when you do it that way, you're more likely to take the trade. Now, Tesla definitely can run up way higher than this, but overall, we can see that Tesla definitely can give us, 792 tomorrow. Y'all see what I'm doing? Y'all see how I'm not really, I prefer the retest anytime. So I don't care if a stock pulled back. I don't care if a stock is just running up. I'm waiting for it to retest a support level before I take calls again. Same way with puts, right? So as you can see, Tesla came back, retesting it. I'm taking it now. right? This is how I enter on a move that's been running up. This is how I get a piece of the move, right? I'm waiting for it to pull back, for it to go higher. Let's understand, guys, stocks, when they make a move up, they have to pull back, guys. Hold on. They have to pull back to go higher. And I don't think people understand this, right? The problem with other people, they try to take puts on this. They try to take puts on these, oh, Tesla just ran up this much, so I got to take puts and, you know, do all that. No, that's not how it works, guys. No. So let's see. Can you look at QQQ and point the patterns you see? I'm having difficulties with that. Sure, let me write that down and go back in QQQ, check QQQ. Let me finish answer these questions because people might have it over what we're going over right now. Do you have an example of a puts? Yes, I got an example of puts. Actually, let's go to that real quick. So another way to treat the opening price is if the stock rejects it. So let me show you an example of a trade that I took on puts. This was, like I said, this was 83% on Nvidia. I just showed this right before we started class, but I'll show it again. Repetition is king, right? So let's do the replay thing right here. All right, so now let's get into a put example. So as you can see, we still rejecting that opening price pretty bad. You know, we keep rejecting it. So, you know, I'm looking to see if we break. We got these huge seller wicks. So as you can see, if we retest it again and we get another wick, I want to take puts now. Now let me get an example. So the market here, it opened up. This is the candle that it opened up on, right? As you can see, remember, we already had that opening price. The opening price is still valid until it's finally broken. So as you can see, that opening price is still valid. So as you can see, we had that opening candle. What did we do? Huge wick at it. Next candle, huge wick at it, right? So as you can see, I'm literally saying, all right, bet. It want to keep wicking at this level. Okay, I'm taking puts then. This is on the 10-minute time frame as well. I'm taking puts then. Stop loss if we break above, right? So I normally plot my little red box to them wicks highs, the highs of those wicks. So as you can see, I'm like, all right, bet. I'm going to take puts then out that opening price, and my target is normally that low. You got two different lows. You got this low or you got that low, whatever target you want to do. Let's just do the most recent low. That's always my first target. So as you can see, so now I'm taking puts. This is where that acronym that I say TTDT comes in at. This was a trade that I actually signaled in the chat. This is literally what I did, right? So let this trade, let's let this trade play out. Remember, I'm taking, since we can't break above the opening price, now I'm taking the rejection of the opening price. Because as you see, we can still reject it. And somebody might ask, well, Jay, how do you know that it's going to reject? You don't know, but this is where you start using SPY, QQQ. You have those next to you. At this trade, I was looking at SPY at the time. SPY started like looking bearish. It really didn't want to break a level. So that gives me more confirmation to take puts on the video, right? It gave me more confirmation that we wasn't going to break. So let's walk through this trade real quick, right? So let's go. Here we go. Boom. There we go. Started rejecting. I did go a little red here. We couldn't close above that level. Went ahead, held the trade. There we go. There we go. Here we go. Here come my target. Remember, we're not selling because we're waiting for it to hit our target. We want to let the trade run, guys. Let your winners run. Let's make this a different color so nobody get confused. There we go. Let it play. Boom. That would have been a hard one. I ain't gonna lie. That was a very fast exit. I ain't gonna lie. That was a fast ass exit. But we actually was able to capture this trade anyway. So you got to be able to sell into strength. Remember, this is a 10-minute candle. So it wasn't as fast as it just looked on there. But let's replay that one more time. Hold on. Cancel that real quick. Actually, if I'm not mistaken, we took 2 entries on this, didn't we? Yeah, we did. I'm gonna send y'all a screenshot of this whole process of this trade. We actually sold there. Now that I remember, we did. I remember this now because I thought it was going. I remember this trade now. Me and Sean was in this trade together, and I ended up telling everybody to sell because I wanted to. I remember we bounced off at this level. I'm gonna walk y'all through so you can see. So let's replay that a little bit. Yep, I remember this trade now. I'm gonna send y'all the actual like the live of where we actually took this trade at. So that way I can kind of see my thought process. Me and Shine, if you don't know who Shine is, most of you, everybody should know who Shine is. Me and Shine was in this trade together, and I actually signaled to get out there. And the reason why, I was afraid that we were going to bounce. And in my way, it actually happened. We had 2 entries on here. So here we go. Boom, I just want to walk y'all through. What do we have? Also, what confirmation do we have to keep running puts here? What just happened? What just happened? A death cross, right? All right, so look, that's my target. I remember this trade now. I can see y'all the thing so I can kind of see where I was coming from. There we go, hold on. It hit our target immediately, and it kind of, I ain't gonna lie, I think we was up like 50-something% or whatever, and it happened pretty quickly, so we ended up selling out for 40%, but I thought it was because I thought we were going to bounce, so that's why I took profits, right? I actually took profits on here, and I can see, actually, I can kind of see, you know, you could have definitely got caught in this. Sean actually got caught in this, but I was able to take profits, and I signaled to the chat to get out. And then we were able to re-enter on this trade. But let me show you, Sean still held and he still won the trade, but I kind of, you know, just got out because we bounced at that level. So I was looking for us to break this level first before entering again. So I'm gonna show y'all my 2 entries on this trade. So boom, we took profits about 40%. Then we ended up retesting it. And this is where actually I think I might have tried to run calls, if I believe. No, I don't. Did I run calls? I have to go back and look at the screenshot. Did I run calls? I don't think I ran calls. I think I was about to, and I never did. Just because I was thinking more double bottom. But as you can see, it never was a double bottom because we didn't have, like, it was kind of just like, you know, that top. It couldn't be a double bottom unless that it was higher than that neckline. Yeah, kind of get what I mean. And I'm gonna answer questions in a minute. I'm just trying to show you both of my entries and kind of my thought processes. So now at this point, you know, we out this trade. So now I want to take it below that low, right? That's a new trade. Now I want to take it below that low. So once we come below that low, there we go. It was because, was it because the zones were above? I guess you could say that. You know, when you're looking at a double bottom, you don't want that, you don't want that, don't even know what to call this. You don't want the neckline to be the same, if that makes sense. So like when it comes to double bottoms, you don't want it to be like this, right? You don't want it, the neckline, to be just as equal. That ain't, this is just a range at that point then. Like, yeah, it can still work, but no, not necessarily. You don't want them equal. You don't want it like that. But anyway, so now my new entry, do everybody see why I'm saying, okay, my new entry is now if we break below that low? Do y'all see why I'm saying that now? And I'm gonna see out the screenshot for the people that don't believe or whatever. I'm not saying that y'all don't. I'm just trying to show you, like, we were able to catch this trade twice, right? So now I want it under that low. You could have took it again if you wanted to as a rejected, but I wanted it under that low for another quick gain. So as you can see, we let it play, taking it below that low. There we go. I'm not gonna lie, I kind of got in a little early, then I went red a little bit, and I was trying to see if it'll fully close above, and it started closing above a little bit, and then there you go, we finally got that candle. Now, I'm very transparent with people. This, taking it below that low, was a very harder trade because it broke some of my rules. I'm gonna lie to you, I definitely should have waited for it to close above. It definitely, some people might say that was a little bit of luck. I'll just go over, like, you know, I kind of just tell you everything. Not every trade is going to be as easy. This trade definitely was a harder trade, but as you can see, it still worked out in our favor. So now, there we go. We continue with it. Finally hit our target. We trim it here. We're trimming here. So now at that point, we don't have no previous levels logged. So if it breaks and you still want to hold, make a new level, new support level. The next one is here, and see if it goes there. We're still trimming. There we go. It hits that level again. And now we're most likely out of that trade. I broke the rule of not waiting. So as you can see, let me replay this one more time, where we took the second trade at. One of my rules is to wait for it to close below before I take that trade. I actually took it on this candle, my fault. I took it on this candle. I took it on the next one after this one. I took it literally after this candle formed. I took it here. Right there. This is the candle I took it on. Risky entry, risky. I broke one of my rules. So I wouldn't call this a good win. Yes, it was a win, but I wouldn't call it a good win because I broke one of my rules. But I did have a legit reason on why I took it, because can anybody tell me what is the stock price doing right now? What is the stock price doing? One of the little confirmations that I had that made me still want to hold this trade. What is happening right now? What makes me think that it's still bearish? Not a chart pattern. What makes me still think below the EMA? It's still below the EMA, right? Below the non-EMA is bearish. Get used to using this non-EMA, guys. Get used to using it. It definitely is going to help you a lot when you're deciding to hold a trade longer. So I was able to hold this trade. We still held below the non-EMA. Like I said, this wasn't a pretty trade. This was a little ugly because I did not wait for the close, but it happened to work out in my favor. Still below that 9 EMA. Boom, hit targets, trimming, full position, I'm out. Right? And there we go. Did this trade make sense? Yeah, like I said, it's not going to always be the prettiest one. What's the big difference between the 8 EMA and the 9? I use the 8. There's not really no extra difference. I just use the 9. I know people that use the 8. There's no real big difference. You just get an extra data. That's all it is. All right, cool. So like I said, not every trade, I'm not here to say, dreams, not every trade is going to be as easy as the next one. But, there's hard trades and there's easier trades, right? This one, the first trade was easy because I took the rejection of the opening price, but the second trade was harder, right? So I want you guys, if you don't learn anything today, I want you guys to go in and get used to plotting these opening and closing prices. And what I'm going to actually do today is I'm going to go in myself and I'm going to find prices like stocks that haven't broke their opening prices yet. And then we know to plot those levels. So what you should do tonight is you should go try to find stocks that hasn't broke their opening price yet from today. So look at stocks, you can go on Robinhood. That's the easiest way to do it. Not gonna lie to you. Go to Robinhood, go look. If the stock hasn't broke that opening price today, put that down because that's going to be a level that you use. That's a level of significance, right? That's what I want everybody to do. Did you plot the opening price going down? No, what you mean the opening price going down? I don't know what you mean by that. You talking about the opening candle price? Is that what you're talking about? I do classes 3 to 4 times a week. So you don't have to get all the answers today. I do them 3 to 4 times a week. Like I'm doing another one tomorrow. So you definitely be educated. I just dropped the links before the class start. Yeah, I'm not gonna forget. Trying to see. But everybody, that was kind of what I was going over. We definitely took a long time on the opening price because that was kind of new to you guys. So I'm gonna definitely we can do the trend tomorrow. But I do want to tell you guys that is what I've been using, is utilizing this opening price. It has been, in my opinion, it has been the best adjustment to my trading strategy this year by using the open price. It has kept me out of a lot of chop. Hold on, one of my people. Let me see. Hold on. We had 10 people leave. I can 100% guarantee you it was definitely my mentees and not BWSO. I can 100% guarantee you it was them. X1, you can talk.
Yo, you get me?
Yeah, what's up?
What's up, bro?
What's up?
What, my hand was raised?
Yeah, your hand was raised like
Oh shit, that was on accident, bro.
No, you good. Okay, so any questions right now as far as anything? How did you learn that strategy? Okay, so how did I learn it was simply like, okay, guys, I'm the type of person, if something is not working for me, I'm going to find a reason on how to fix it. So one of the problems that I had in this current market was that we're in right now was I had trouble with the chop. I literally was trying to find a way to not get chopped out because, as you can tell, most people lose money when the market is choppy. So I wanted to find a way to where I can at least eliminate the chop. And one of the ways was trading the opening price, right? Because now a lot of these machines Understand we're trading against algos, guys. A lot of the machines that we're trading against are using that opening price. They can care less about a pre-market high, pre-market low. They're using the opening price. Now that you guys looking at it, I'm about to go here. I'm about to just show you the opening prices and how effective they are. Look at this opening price. Do y'all see how well they're respected? Out of any support and resistance level that you ever made, do you see how accurate this? It literally respected the hell out of this. Look at that. Do y'all see this? Look how well they respected it. Literally, it was rejecting it almost to the T. We had one candle break above. That's it. Look how perfect that was. So now let's play it. Let's go ahead and play it. Let's let it run, right? Let's just let it run. Let's just let it run. Just let it run, right? So let's just let it run. Let it run a little bit. Let it run for a couple of days. Yeah, I'm gonna set up my trade for the week. I got y'all. Let it run, let it run, let it run. I don't know how to speed it up, but it'll get there. The blue bar on your left. All right. Here it comes. Here it comes. Here it comes. As you can see, we're looking to see it retest that opening price again. Still wicked. Look how, look at that. At this point, I don't know what to tell you. Look how accurately it's wicking at that price. Look at it. So then now we notice a chart pattern. We finally get a chart pattern. We haven't got a chart pattern all week on Nvidia. Then we finally get one, and it just happened to be at the opening price. So now what happens? Take entries. There we go. Still valid. Boom, right there. It breaks out and it sends. Look how hard it sends when it breaks that price. Look at that. That is beautiful right there. That is a beautiful trade. I'm so mad that I missed it. Beautiful trade. As soon as it sent it, beautiful trade right there. And we just used the opening price. We did the same thing. Now I want to show y'all real quick using the opening price. This is called a bull pennant. A bull pennant. So let me show y'all another example. We took this trade this week. We took this trade this week on SPY. Let me show y'all. Where is it at? Hold on. We used the opening price as well. This is when I actually introduced the chat to the opening price. So let's go here. We're looking for that. Where is the 413 level at? 413, 413. The opening price on that day was 413. What was it, guys? 413.55, I believe. 413.55. It wasn't that day. Where did it open at 13.55? Where was it? What day was that? Here it is right here. Okay, that's why I like Thinkorswim. TradingView be kind of messing up on the opening prices by a couple of dollars, but it's fine. Okay, so, and this is a good example of the trend. I think I already went over this, but I'm gonna go over it again. So right here, right, this already had happened. The opening price that we were looking at wasn't none of these, because none of these were opening prices. The opening price was actually this candle right here. Y'all see that? Y'all see this candle right here? This opening price on this candle. Y'all see that? Everybody see that? Okay, so that is my opening price. I literally put in the chat. I can send it to y'all. I put in the chat. I want to take SPY over 413.55. That is exactly what I said. That's exactly what I put in the chat. I can send it to you so you can see. So I put that. Did you plot the opening price for puts? We're just plotting the opening price in general. Like we don't know if it's for puts or calls yet. That's just step number one to the trading strategy is to just plot it. Just plot it. Like we don't know if it's for calls or puts yet. Just plot it. So as you can see, we plotted the opening price, and this is where this saved me the most, right? It was actually, let me edit this because it was 1430.53. I mean, this level was like beautiful. There it is. We can just put it right there. So As you can see, we had the opening price, we sold off, so we know we want to take calls at the opening price. As you can see, what did it do? We did not get shooken out. Like I actually, my friend Isaac that had does his trading, he actually took SPY on this and lost on it because it never broke above that opening price. He took calls, right? But that opening price, look what it did on the money. I mean, it literally doesn't get any easier than this, right? Simpler than this, right? Look at that on the money. I mean, to a T. Like it literally rejected that level to a T. We made that level here. Let's go. Let's do a replay real quick. All right, so the market not open yet. So this level does not exist. I literally waited. I literally put, this is exactly what I said that morning in the chat. I said, hey guys, I'm waiting on the stock market to open to get my price level. The stock market open, and that's literally right after right after I said it, they sent it, right? I sent it. I said, all right, level of the day. That's what I call it. I call it level of the day. Level of the day. This is what I call it. I say level of the day. So the level, the level of the day for SPY is 413.55. That's exactly what I said in the message. What if the very first candle above the open price is huge, but was waiting for the closing during the 15-minute? Oh, you're going to have to ask me that another way. This was in my chat. But I'll start putting it in BWSO as well. So you're waiting for the body to cross the opening price. Yes, basically, yes. Guys, don't overcomplicate it. Y'all trying to, I know what y'all doing. Y'all trying to find the what candle. Literally, it's the first candle of the day. Whether that's going to be a 1-minute candle, 5-minute candle, it don't matter. All of the candles going to have the same opening price, right? Don't overcomplicate this. You're making it harder. Don't overcomplicate it. Now, entry, we're just waiting for a candle to close above, right? We want the body above, right? So as you can see, we let the day play out. I did not get chopped out at all, right? I want to see the candle close above. So as the day went by, I'm chilling. I'm literally chilling. Trading is a patience game. I'm chilling, right? Nothing yet. Nothing. Did not break above. Boom. My friend took calls, got shooken out, lost on a trade. I haven't got shooken out because it haven't broke my level. So there's no point in me need to do it. But also plot the previous day's high. Make sure y'all plotting those. So that's going to be a level if it do break. That's our first level is going to, right? Y'all see where I did? I plotted the previous day's high. So you always want to plot that. Let it go. Boom. You know, it still haven't broke, so I don't care about it. All right, this is where it broke, right? Now, I don't like breakouts. Now, if you would have took the breakout, you know, your first target is up there if you want to. I wait for the retest. Sometimes I will take the breakout, and normally I'm selling. But if you didn't catch the move, you can always catch the retest. I prefer catching the retest, right? So as you can see, here we go. It hit that level. You could have started trimming profits right there. As soon as it hit, you start taking profits. It couldn't hold above that level. So at this point, you knew to either, it didn't break above that level. But for me, if I'm trimming because of that level, if the next candle does not open above that level, then I'm cutting. I'm taking my profits, right? So at that point, you should have been taking profits. And if you held, that's fine. I'm going to show you where I entered at. This is similar to the strat. Kind of everybody be saying that. I never looked at the strategy, but so I'm going to show you why I entered it. All right, there it is. So I'm entering as it retested this level, right? This is my entry here. It retested it. I literally signaled to the chat. I took XPX. I didn't take SPY, but I signaled to the chat, hey, I'm in SPY calls. Boom. There we go. It bounced, right? Hit that level, start trimming. Now remember, we're trimming at that level. Get used to trimming. I don't know if people don't like to trim, right? If the next candle does not open up above there, I'm cutting it. I'm taking my runners. As you can see, what happened? Could not hold above. Could not hold above. So at that point, I'm kind of taking profits. But if you wanted to, now you have that non-EMA supporting your trade, right? So you could have just held if you wanted to. But at this trade, I think I signaled to the chat to take profits, and I was just waiting on the re-entry because I wanted that candle to close above. So as you can see, it came back down, retested. There we go again. This is my second entry on it. I took 2 entries on this. Got it back in it again, reloaded. when I say trim, I'm selling, I have multiple contracts. So I'm selling majority of my contracts at my target, right? So now it gets into kind of like a scalp territory. Right now I'm going over day trading. I'll go over swing trading tomorrow. But this is day trading because this is kind of what everybody is doing. So go over there, took another entry. I signal to the chat. I'm back in. There we go. My target is that same thing again. Let's see if it can break this time. There we go. It's starting to wick at it. There we go. All right. I'm selling into strength. Now that we're fully breaking that level, I can decide if I want to hold again. Now that it's breaking that level, this time, if it comes back below that level, I'm going to cut my runner. So let's see what it does. Still above, still holding. Still above, still holding. There we go. Still above, still holding. That's when it broke below. I took my profits and I got out. Right now, that's when it started being about a 9 EMA. So, I could have probably held this because it still was holding my 9 EMA, but not gonna lie to you guys, I ended up taking profits and just called it a day. But I'm pretty sure I got lucky. So as you can see, I actually like while we were on this live, I was literally telling you where I did not know that it did that. I do not remember it doing that. But as you can see, the reason why I got out, and I'm glad that I got out because look what happened, right? The reason why I got in, it started to be invalid. We started breaking below that level and I'm out. I literally did not know this happened, but there you go. I was able to get out. I ain't gonna lie to you. So, but what we did, we retested that level again and then we broke below, right? And then that's when I got caught. Now I'm about to show you a losing trade, right? I never told you a losing trade, but now I'm about to show you because I definitely lost on this next trade. So as you can see, I got out. I got spied 2 times. So now we're below that closing price. Now I took puts because now, since, now we're below that closing price, I'm thinking bearish. Below closing price, below opening price means run puts. Look, it happens, right? It happens, right? My target was here. This is how I drew my risk box. First target here, second target there. I'm just showing y'all like how transparent that I am when it comes to trading. I tried to take puts. I drew my box like this. If we break above, I have my risk to reward here. And if we break above, I'm going to cut this trade. And I actually lost on this trade because what happened? There we go. The damn thing opened above. I cut the trade and I took a loss on this trade. Do y'all see what happened though? Y'all see why I took it and it just didn't work, right? It didn't work. I cut the trade and I moved on by my day. It didn't work. Below the closing price, you normally want to run puts. In this situation, it didn't want to break, right? But do y'all see why I took it? Do y'all kind of see my reasoning though? Like, it broke below the opening price. I took it and it didn't work out. Y'all started a new one, CTDT, cut the damn trade. Yeah, just cut the damn trade. Looking at the volume helps with the retest. Yeah, looking at the volume does help. I'm not gonna lie, I'm not really big on looking at the volume, maybe in the future, but I've had bad experiences with the volume, so I kind of just left it alone. Crazy because I was looking for calls from that candle below. Yeah, see now there's different ways. I could have definitely been looking for calls again, but I was using that opening price, so I was trying to take puts if it did, and we did get a death cross right here, so it made me think bearish. But overall, I took the trade, I lost, and I just cut it. Right, I left it alone. As you can see, it ran up again. And the trade just ran and then it finally came back down. But overall, this trade was just all over the place. I ain't gonna lie to you. It started like really just like chopping, honestly. Like it was, look at this. This was just choppy as hell. Like at that point, it was really hard to do this trade. So the top yellow lines represents open and closing price. No, the yellow lines, these yellow lines, these are support and resistance levels. I don't know if that was confusing people. These were, the opening price was this level right here. I'm gonna make it green. For now on, I'm gonna always make my opening price green. Right there. So that was my opening price. These other levels are support and resistance levels from previous days, right? So as you can see, plotting the high. Let me change that color. Honestly, guys, the more classes you have with me, the more like I understand if all of this is confusing to you right now. The more classes you have with me, they'll all tell you the better it gets. Like it gets better. Like you will understand more. This is your first day, so some of you guys' first day in boot camp. This is definitely your first day. Okay, so eventually it did come down, but like I said, I was chopped out of this trade. So at this point, there we go. It was done. It was done for. Puts under close from the day entry. Puts under the close from the day before. Yes. You could have did puts from the close from the day before. So like let's see the day before. So we took the trade. Where did we take this trade? So this is the opening. So you could have took puts on not the close. No. The close was here. No. You could have took the close. You could have took the close. You could have took puts from yesterday's lows. So what was this? Let me see. May 22nd. Was this the weekend? Oh, this was Tuesday. So this was Monday. Okay. So you could have took, honestly, I probably wanted to puts unless we broke like something like this or the previous day's lows or some type of low, right? Probably under there or something like that. But overall, puts was pretty hard. I'm not gonna lie to you guys. Puts was pretty hard on this trade. It came later on throughout the day. Extremely later on throughout the day. Like it just started pretty much just chopping. It's just pretty hard to trade. So at that point, it wasn't really it wasn't really nothing there no more. Do you buy your puts and calls at the market price instead? No. I'm glad you asked that. Only limit orders. Only limit orders. Only. If I can't get filled at the price I want to get filled at, I'm gonna keep trying until I agree on the price that I want to pay. Never give the market an opportunity to decide what they want you to pay for it. No, you go in, it's your money. You go say, I only want to pay this much for a contract. This is how much I'm willing to pay. Never do market. On the EMA, what does the green and brown line represents? The green and brown line on the EMA. Yeah, I don't know what you're talking about. You talking about the green? The green threw me off. Are you talking about? Yeah, these are the 9 and the 21 EMA. It might be brown on your screen. I don't know. It's blue and orange. The 9 is the blue one, and then the orange is the 21. So what I try to do, I try to keep my colors the same for every trading platform because I don't, honestly, guys, I don't use TradingView. I'm just using it for the replay thing. I use TOS. I will use TradingView every now and then if I want to, but I normally use TOS for my charting. But like I said, the best thing to do, guys, is download Robinhood. Like utilize some of these things. Like Robinhood has the opening. I'm gonna circle it for you, and I'm gonna send y'all a screenshot of where it's at. Use Robinhood. I'm trying to tell y'all, I keep trading as simple as possible. I don't want to think at all. I want to keep trading as simple as possible, right? I'll go on Robinhood. It's already right there for me. I plot it from Robinhood, right? Robinhood tells me the opening and closing price. I do it right from Robinhood. And yeah, don't just jump into stuff like this. Like I said, we're gonna have multiple classes. You know, I have classes with mentees all the time. You guys can definitely pick up on my strategy. Bootcamp people, you already know how I go. Pick up on my strategy, and I always do trading recaps literally almost every week I can, multiple times throughout the week. Every trade that I take, because like I said, every trade is different, right? But overall, we still want to use the same characteristics. When you swing trade, do you still limit close to profit? Do you still do limit close? Yes. Going to try your strat and cut down on the BS on my chart. Yeah, as you can tell, guys, I don't keep a lot of indicators up. Like I don't even use volume too much. Now, I'm gonna show y'all at another time with the people. I'm gonna show y'all another time where I actually use volume. I don't use volume that much, and that's just me personally. I try to keep. I feel like if you understand market structure and you understand the wicks and everything, sometimes you don't really need it. But that's just me personally. A lot of traders might disagree with that, but I do know profitable traders that agree with me as well on that. So that's just totally you. So I'm not a big fan. But there are times that I do use volume. And one of the things that I use volume for is if I see a stock pushing on low volume, then I know that it's a fake out. Like, for example, I actually caught Amazon recently for $15,000 on something like that. Amazon was pushing. It was trying to break a level, but it was pushing on lower volume. So I noticed that. And once it got to that level, I was able to take puts on the rejection, and I had made 15,000. That's the time that I use volume. but it just depends. Honestly, we be honest, I only use volume to take puts. That's kind of the only thing that I use volume for if I ever do it. So just so be clear, can you circle where you got in at? I think the way you worded it threw me off as if you weren't in, then you say you sold. So I took these right here. I took the retest. So as it was retesting and wicking here, I'm taking entries here. Stop loss right below, right? I took my first entry here, got here. I started selling. And as you can see, I'm not lying to you guys. I'm not finna lie. Like I took calls here for the bounce because everybody asked me, how do I take bounces? I'm taking bounces. I took the bounce here, started selling here, tried to keep a runner, but we could not open up above, or we couldn't hold above this level. So I ended up cutting and taking my profit. So I think about when I sold, if I can believe I was up 30 something, 40%. And then I sold some contracts around 30, 40%. And then here I got out at like 26%. And then I ended up just, selling. I waited for us to retest again, took entries again here at that level, took it again here, was able to come back up, sold into strength, held, start selling more contracts here at the same price, held, tried to hold my runners, trimmed again here, because what we do, we keep touching targets. Then, as you can see, we couldn't hold above again. So I took my runners again. I think up here we were up another, what was it, 66%? The runners got out at like, these pullbacks hurt like hell. The runners got out maybe at like 40%, maybe 30, whatever. Like I said, you're not going to always catch the whole move. I think that's what people don't understand. You're not going to always catch the whole move. And like I said, more trading recaps, you guys will see my entries and exits a lot more. But yeah, it's always good to do entries and exits right after I take them, like the same day, so I can actually get a better you can kind of get a better understanding. Are you using the 5 and 9 EMA? No, I'm the only EMAs that I'm using is the 9 and the 21. No, the trail, I just drew the trail line just to draw it. So I wanted to show y'all, I'm gonna go over this tomorrow as well. But here you go, a good example of identifying a trend. So anybody that's looking for an uptrend, right? We had an uptrend, we had higher lows, higher low, just a low, kind of created ugly wannabe double bottom. And then we had another. So that's all I was doing that trend for. The trend line had nothing to do with this trade that I was just drawing it, because when I see it, I just get used to seeing it. You also could have took puts on a trade line break if you wanted to, but it's up to you. Above opening price calls, below first candle the day for puts. No, above opening price for calls. And if we break above the opening price, if we break back below the opening price, you take puts. The only time I take puts, like without the opening price, is previous day's lows, if that makes sense. So like the previous day, let's say that Apple previous day low was 157. So my put trigger is going to be below 157, if that makes sense. Or if we break above the opening price and then fall back below the opening price, then I take puts there as well. But normally I'm always taking puts below previous day's lows, if that makes sense. That's normally where I'm taking puts at, unless we in like a double top or something like that, if that makes sense. I'm a little confused because it says a swing trader is a trade for a few days to a couple of weeks. It looks like you're in for a few minutes. It makes me think that you're a scalping. Please kind of, okay. So understand the time frame that I'm on, guys. A scalp is normally a couple seconds to a couple of minutes. Scalps last for at least 5 minutes max. Understand the time frame that I'm on, guys. This is a 10-minute time frame. So these moves, like this move right here, buying here, this is a 30-minute move, right? This move right here, this was a 40-minute move. So these are day trades. These are not scalps. I'm not on the 1 minute or a 5 minute. I'm on the 10-minute chart. These are day trades. These are longer trades. I do swing trade, but these are longer trades, guys. I'm on the 10. Look at when you're looking at the trades that I'm taking, look at the time frame that I'm on. These candles each candle represents 10 minutes of price. So these are bigger candles, right? This trade right here, boom, 1, 2, 3, 4, 5, 6. This trade was about an hour and 20 minutes. So this was definitely a day trade. So basically the same strategy on swing trade as in day trade, plot levels, and so on. Yes, now the swing trading is a little different. The swing trading is kind of more chart patterns. For me, is more chart patterns, a little more technical. Kind of with day trading is kind of trading levels. With swing trading is more like chart patterns for me. Like I like the swing trade with chart patterns. Like a swing that I took recently was Amazon swings from the daily time frame. I only swing from the daily time frame as we come here. Hold on, guys. Somebody drew all over the screen. Hold on. Okay, so one of the swings that I took on Amazon was, let's delete this. I took Amazon calls for a swing. This is a pretty nice swing as well. This is a pretty nice swing. So one of the trade, this is a daily time frame. So understand the time frames that I'm on, guys, when I'm doing this, right? So as you can see, you know, Amazon, we had this little double bottom right here, right? We had this little double bottom right here. You know, I'm taking Amazon in this area because I'm like, if it breaks below, then I, you know, do what I got to do, cut my trade. But overall, you know, it looked like a double bottom. So I'm swinging it to that neckline and I was able to exit Amazon here. And as you can see, this was I know some of my mentees caught this as well. I know Scotty did. This went from 253 all the way to this was a $300 move, $250 move on Amazon that we were able to catch. And this was a swing, right? So understand that. Like this was a swing that we were able to catch. $250 move on Amazon. You get what I'm saying? So the time frames definitely make a bigger difference. This is how I differentiate if it's a day trade or a swing. I'm mainly doing my swing trades off the daily time frame. But we'll get into swings tomorrow. Great question, though. But I'm day trading. I'm a day trader. I'm a long-term day trader. And that's why some of my trades turn into swings. So I like day trading longer because I like bigger moves, if that makes sense. So, and I only swing trade for them. But we go over swing trading in the later time. The green line is the support of the candle of the day before. No, the green line is the opening price of the previous day on that particular day. That was SPY. That was the opening price. I'm gonna show you an example today. Like if I can find something, like in the morning, I'm gonna do this. I'm gonna do the same thing because I know that a lot of stocks broke their opening price today. So tomorrow I'm gonna do the same thing. I'm gonna say level of the day, and all it is the opening price. Above the opening price, we take calls. You're gonna see it's kind of hard right now because it's new to you guys, so you kind of don't understand it right now until it actually happens. So like in the morning, I'm gonna give you a good example of it, right? So you can kind of see what I'm talking about. So yeah, I can kind of, you know, you can actually put it yourself. So be up in the morning so you can see it play out. How do you determine the previous day's lows? Is it the lowest point of the yep, that's simple. Literally, it's not, I'm not trying to complicate nobody. The way you determine the previous day's lows is the lowest point of the previous day. It's that simple. Take puts under that. So you use a 10-minute time frame for day trading is the only one you use. Like I said, I'm being honest. In this market right now, I'm using the 10-minute for my day trading. I used to about maybe like a couple months ago, I used to use the 15-minute and the hourly, but this market is kind of hard getting those longer day trades, if that makes sense. It's kind of hard getting those bigger moves. So you got to kind of use a smaller time frame because you know these stocks be pulling back and these pullbacks kind of hurt. But just to put it in your notes, 10-minute, 15-minute, and the hourly chart is for day trades. You might not be using the hourly chart right now, but that's a good chart to use eventually. It's gonna come a time where we can able to be holding trades longer. But right now, 10-minute, 15-minute, hourly for day trades. For swing trades, I use the daily. I don't use the 4-hour too much. I'm not even gonna lie to you. I don't use the 4-hour too much. I know there's a lot of traders that I know that love the 4-hour. I don't use it that much, but 4-hour in a daily and weekly for my swing trades. So to repeat that one more time for your notes, 10-minute, 15-minute, hourly for day trades, 4-hour, daily, weekly for swing trades. Now, don't be surprised though. There are times where I will swing trade off the hourly chart. And the reason why is because those moves normally hit immediately the next day, right? Those are the only time that you would see me do that. Is I have this thing where I call them buzzer beaters. So at the end of the day, probably about 5 minutes before close, I normally signal to my mentees or my chat or whatever, and I'm like, hey, we got a buzzer beater. Normally those plays are plays that we buy at the last 5 minutes before close, and we try to sell them at that opening pop, wherever direction it is. I do that a lot. That's normally if I'm on like the lower time frames and I'm trying to catch a quick swing. I used to do that a lot. I don't do it as much because this market is a different market in the morning. But we actually had a time in our life where, I don't know if BWSO remember this, but we had a time in our life where we actually was trading Square every single day. Like we had a whole system. Like I literally made like $70,000 on Square year to date, be doing that strategy last year. I literally bought it every single day before close, and I sold it the next morning. I used to do that all the time. Don't do it as much anymore, but it, like I said, don't throw it out. It will come a day where we're doing that again. So, yep, this was a 3-day swing, right? You just hold it for 3 days till it gets to the neckline. Like I told you guys, like look at the double bottom. That first target is 90% of the time is going to that neckline every time. Look at any double bottom. Let's go look at some double bottoms real quick. That's why I love double bottom. Let's go look at AAL. What is it doing? We had a double bottom right here, right? We got the double bottom. We got a double bottom. We plot our first PT price target at that neckline. What do? 90% of the time is going to that neckline. That is exactly what it did. It went exactly to that neckline, right? I'm trying to get y'all to understand this. You don't have to. The problem is people put their necklines up here. They want to get all of this. They want to catch this whole move. They want it at the high of that double bottom. And then what happens is it go to that neckline and then it, play around it a little bit and then it fake out and you give all your profits back, right? No, I'm selling at that neckline. That's enough money for me because I don't buy at the neckline. See, hold on. Let's look at that real quick. Hold on, because I had somebody earlier just say that. Hold on, I'm about to show you why I don't like that neckline stuff. Here it is, right? A prime example on why I hate buying at the neckline. Prime example. Look at this. Look at this. Look at prime example. Look at this. Okay. All right. AEL contracts are already up 400%. All right, I'm gonna buy at the neckline now. It's at the neckline. They told me to buy at the neckline. I'm gonna just swing it now because I think it's gonna go to that high. All right, I swing it down. I'm negative. Damn, I'm down 50% now. Why am I down so much? Oh, I bought on the premium spec. Now I'm down. Damn, it keep going. Oh, I'm cutting the trade. Y'all see now, this is exactly why I don't buy necklines. I literally don't buy for this exact reason right here. This is a prime example. I'm buying here. Contracts are dirt cheap. Stop loss is way clearer. Look at my risk to reward. If you don't believe, if you feel like my strategy is BS, hey, take it how you want to take it. But hey, it worked for me. It worked. Let me show y'all. I'm gonna walk y'all through this trade right quick, right? I didn't take this trade, but one of the mods did. One of my mentees that they can call trades in the mentorship. They took this trade, the exact strategy that I taught them. Boom, we were able to hold that support. They literally signal calls right here. They signal calls. They like, I'm swinging AAL calls. Stop loss, obviously, if it breaks below there. They swung calls. Look at that. Look at that. Look at that. Come on now. They selling. They're selling at the neckline. So while we're up, look at that move. That was for $15. If you don't know AAL, we all know a $3 move on AAL. Y'all know how big that is. If you trade AAL, you know how big a $3 move on AAL is. You know how big that is. That's a huge move. That's over. What was this? Let me see. This was 1,000% right here from 1650 to about, it was really 1,000% here. This was about a $3 move as well, maybe a little $4. So this little move right here, obviously this is more than 100%. This is like 300% right here, maybe 400, because this is 1,000 for $4. So you do the math. This is $1 off from that move. You do the math, right? They took the trade. They're out. They're literally saying, okay, I'm out of this trade. Then what happened? Everybody else talked about on the neckline. So then let's see what happens. You bought the neckline. You instantly, next day you red. Next day you even more red. There you go. Now look at you, still red. So y'all kind of get to see how my strategy works out. That was a good example on how it works. Do you keep a bunch of levels on your chart? Me personally, I redo mine because it makes me better at making levels. I like to reset mine. I like to literally clear my charts and start with fresh levels. It makes me better. If you don't want to put in that extra work, that's fine with you. But I highly recommend that you clear your charts and you start over every single time that you want to chart something. It makes you better. It makes you better. You're getting better at levels. You find more accurate levels doing it that way. They told me to buy on the neckline, literally. The opening price, they talk about so next day you quit trading. Literally, you done. They didn't told you buy the neckline. You done. You done. You like it don't work. Okay, what's some? I got it. It's on my Instagram. This is recorded. Yes, this is recorded. How do you know if it's a good level if the stock is starting to react at it? You want to have levels that you have the most significant at. And I actually have a video on supported resistance. I'm gonna drop it. It's in the chat already, and if you're not in the chat, I just make the extra. I just send a link to the video. But I do have a level about making supported resistance a video, so just let you do it. It's talking about some hang yourself on the neckline. Literally, y'all see why I don't like buying the necklines now. But as I said, 90% of traders are unsuccessful. They're not profitable, and they're not doing it. Ain't necessarily. It ain't really them. They just doing what they're taught. They're taught to buy the neckline. You see what happens. You go over your trade of the week setup. No, I haven't went yet. Okay, so I just wanted everybody to see that now. Real quick, and I'm gonna let y'all guys go. We've been on here for 2 hours, so it's kind of long. But so when it comes, and it's kind of hard to show you exactly kind of like my trade of the week. The neckline is basically the support of the resistance line. The neckline is basically the resistance. Basically, I wouldn't say the support is really the resistance. Because how you think the neckline even formed? It rejected a level when it came back down to support. They said maybe the neckline used to work. Probably in a trending market, most likely it probably used to work, but it don't work now. So why keep doing it? So, okay, now as far as now, it will be honestly, guys, be very transparent. It will be better to do like my setup for the trade of the week when it's actually like the weekend and like when I actually do it. But for me, the trade of the week is normally a stock that number one has a lot of room in either direction, right? Nvidia was the stock of the week because it has sold off so bad. It had a lot of room of upside, right? This is the trade of the week. For me, it really was Amazon, if we're being honest, but Amazon had just kept sending and sending and sending. So it was really Nvidia. And the reason why is we had an impulsive move, and it had one of my number one setups that I love, which we had the 9 EMA bounce. As you can see, we had the 9 EMA bounce. So it made me want to take this trade for the week. Now, like I said, it's kind of hard to kind of talk about it right now because I find them as they go. But really, all my idea for the trade of the week is a stock that has a lot of upside or downside, whichever way I want to go. It has a lot of room. Some of you guys trade stocks that don't have a lot of room to really move. So I don't know why you want to trade it, right? You want to trade a stock that you want to trade. What kind of weird stocks y'all be trading? Y'all be trading some weird stuff. Like you want to, I don't even know an example right now, but y'all be wanting to trade stocks that move 30 cents. That's the type of trade that AT&T don't be that bad, but people want to trade AT&T on a daily basis, and they don't move as much to really give you a good trade. So you want to find stocks. Now, HD could be a good trade. Now I'm trying to say, when I say weird stocks, like just like those stocks that don't really move, like, yeah, BCA, that's a good one. That's a good one. BCA, like you can make some money off of it, but they don't move as much to make you money on a daily basis as much. Macy's, it used to, but they've been ranging so hard lately. So like stocks like that, people rather waste their money on those stocks. So my trade of the weeks are normally stocks that give me the most upside. Like, can this stock really move? Can it really make a move this week, right? Is it a chart? Is it a nice chart pattern that I like on the daily time frame? All of my stocks of the weeks, it always has something that I liked on the daily time frame. The daily time frame, like I said, is like my secret weapon. If it has something that I always want to see, something that I like on a daily time frame, right? So I want to see how much room it has. Like Amazon, that was money. I mean, we knew that Amazon had room. I literally was telling them, I'm like, bro, Amazon got a $300 move ready. I'm literally telling them, Amazon, I'm like, this stock of the week, Amazon got a $300 move ready, right? It has so much upside. So that's what I did. I took it. So I'm gonna go more into detail over that on the weekend, on Sunday. Like it's hard to really go over right now. It's kind of just like they come to me as they come. Right now, everything is kind of hard to really go over because everything kind of just like gapped up or whatever. Everything is just running, so it's kind of hard. But I'm gonna show you guys. And also, Amazon about to be a stock that we can trade. Amazon can do a stock split, so we about to be able to trade Amazon if you got a small account. So Amazon about to go to the small account list. How do you know which stocks? It ain't about like what can give me a daily range. It's if you're looking at a stock, do it have upside? So like if we looking at Amazon right here, if we were looking at Amazon from here, if we was looking at Amazon from here, you looking at Amazon like this, and we playing it. Let's go ahead and play it right here. If you're looking at Amazon from right there, what are you automatically? You're looking like if Amazon, like think about where it makes the most sense at. Think about where do it make the most sense at? Do it make sense for Amazon to make this huge sell-off? Do it make sense to keep running puts on Amazon? Like, is the risk to reward down to the downside or is it to the upside, right? That's kind of how you're looking at it. So that's one of the key things. So the key things is the daily time frame. I want to see something that I like on a daily time frame. I want to see, it's really the daily time frame, if we be honest. I want a chart pattern. So I'm gonna just type it real quick. Let me type it. Is that the key that I think it is? So, one, I like the daily time frame. Number two, chart pattern, some type of chart pattern on the daily. This is key, on the daily. Number three, at key level. Always has to be at a key level. It has to be at a level. If it's in midair, then I don't want it. Right. And that's the number of things that I'm looking at first. That's like kind of like the most, like I'm looking at that. So as you can see, Amazon, it did exactly that. We had a potential double bottom. We were at a key level. And at this point, that's a trade. There we go. Boom. Took it. Neckline is my target. It hit. There we go. So I hope that made sense, guys. I'm going to let you guys go. If you have any more questions, you could just add me in the chat, or you can DM Keith on Instagram. I'll send y'all his Instagram in a minute if you have any questions. And just go and do your thing. I'm gonna send y'all the links and stuff like that. But other than that, have a great night. I hope you guys learned something tonight. Like I said, I do more classes 3 to 4 times a week. And I hope that you guys learned something, and I will see you guys tomorrow. Somebody asked what that gap feel. I don't know. No, it's not going to feel. No, it's not. No, it's not. No, it's not going to feel that gap. We're about to split. But all right, guys, I'm gonna send the stuff and everything that you need, and I will see you guys tomorrow. We have class tomorrow as well. My Instagram is JSLA Trades. I'll put it in the chat. But, all right, guys.